On December 28, 2023, the E-mini S&P 500 future has been telling us to look for a higher high, and I have repeatedly reminded us to watch for a new high in the previous videos. I have also said that to look for a new all-time high for the S&P 500 when the E-mini S&P 500 future makes a higher high. And last Friday, the E-mini S&P 500 future, the ES, made a higher high and an all-time high. And the S&P 500 followed suit and made a new all-time high last Friday. So now what? Market sells off or continue to make new high? In this video, we'll look at the market internals and the technicals to see where the S&P 500 might be headed. So stay tuned. Last week, the tech sector continued to lead the market higher. The Nasdaq 100 was the top performer and it gained 2.86% for the week. And the S&P 500 gained 1.17% for the week. The two indexes that ended the week with a loss were the Russell 2000 and the New York Stock Exchange Composite. The Russell 2000 lost 0.34% and the New York Stock Exchange Composite lost 0.42%. For the month to date, the Nasdaq 100 remained to be the top performer with a gain of 2.9%. The worst performer is the Russell 2000. It has lost 4.08% for the month to date. The S&P 500 gained 1.47% for the month. Now, looking at the sentiment, the VIX is still under 15 and the put-call ratio is below 0.75. So the market participants are still pretty complacent and a little bit of risk on. Early part of the week, we saw a broad market decline here. And Friday, the new all-time high, we did see a little bit of a moderate type of market participation on the upside, but not as quite as strong that we would expect for a market that is making a new all-time high. And only 113 stocks make new 52-week high. That's way too low for the S&P 500 to make a new high. And it's not a positive sign when you see a negative divergence between the advanced decline line and the S&P 500 when the S&P 500 made a new all-time high. And in the NASDAQ, there were only 2.4 to 1 in favor of the up volume and only 959 more advancing stock over declining stock on a new high for the NASDAQ 100. That is not a positive sign. And the stock that made new 52-week low is actually outnumbered the number of stock that made new 52-week high on the day the Nasdaq 100 put in a new all-time high. Beware, this is not good. More negative divergence between the AD line, the Nasdaq AD line, and the Nasdaq 100. Now let's take a look at the 11th sector in the S&P 500. The tech sector is outperformed. Healthcare is underperformed. Consumer discretionary underperformed. Financial underperformed. Communication sort of neutral. And the industrial underperformed. Consumer stable underperformed. Energy underperformed. Real estate underperformed. Material underperformed. And utility underperformed. 10 out of the 11 sectors in the S&P 500 were underperformed relative to the S&P 500 last week. And looking at some other sector, the semiconductor outperformed, oil underperformed, oil exploration underperformed, retail underperformed, biotech underperformed, mining underperformed, bank and regional bank neutral, home builder neutral, long-term bond underperformed. And here looking at the 10-year versus 2-year yield curve, it is still inverted and sitting at minus 0.263. And the 10-year versus 3-month yield curve remain to be inverted and is sitting at minus 1.246. The 10-year yield is back above the 4% and is sitting at 4.145%. The dollar attempt to move above this 103.82, so the key level to reclaim in order to move up to this 105.88 area. Otherwise, we could see the dollar head back to test this 100 area. And the dollar future is above this 102.50. So we'll be watching to see would it be able to move up to this composite point of control near this 104. Oil is still stuck between this 72 and 75 area. It needs to break above the 75 in order to make another move back up to above 80. And silver's still trying to hold on to this 2240 level. And gold is still trying to break out from this balance area and move above this 2090 area. Keep an eye on this 1944 for potential pullback. Now let's take a look at the indexes, starting with the NASDAQ 100. See that the NASDAQ 100 made a new all-time high, and it is above 17,000. If more upside to come, we'll be watching this bull flag major move, this 100% major move, bring it up to somewhere near the 18,300 as a potential upside target. The Russell 2000 is still hanging on to this 1925 level. So we'll still be watching to see would it be able to make it up back above the 2028 level or break below the 1925 and come down to this 1830. And the Dow Jones Transportation will continue to watch it to pull back and possibly test this 15,000 level. The Dow Jones Industrial made another new all-time high last week, and we'll basically continue to watch that round number up at 38,000 or pull back to backtest the previous all-time high level somewhere near the 37,000 level. The New York Stock Exchange Composite was unable to get above the 17,000 level when the Dow Jones Industrial made a new high, so that is not a good sign. Now, the market was pricing in a new all-time high last week, so the SP 500 did not disappoint. It made a new all-time high and tagged the upper range of the expected move from last week. Now, for the coming week, the market is pricing in a 100% symmetry major move up to this 4,900 area. The upper range is between 4,906 and 4,891.30, and the lower range is between 4,788.30 and 4,770.50. But keep an eye on this 4,900 level. This could act as a magnet. And looking at the ES, the E-mini S&P 500 market profile chart, you can see that it broke out of this balance area and put in a new high as it was telegraphed by the poor high back here and in December 28th of 2023. Now, Friday's session, it left a poor high, and that indicates to us that a higher high is expected in the future. It also left a poor low and some single print. So those are some of the poor structure to keep an eye on for the coming week on any kind of downside or any kind of pullback. If we repair these poor structure and unable to break back above this balance area here when it comes down and repair this poor low, then look for a potential look above and fail type of move coming back down to this 4760 area. Here on the volume profile chart here, we see that there is a small area of substance up here near the all-time high, but beware of a liquidation break and break through this low volume zone here and come back down to test this balance area at 4840. Now let's take a look at the index ETF, and starting with the diamond, the Dow Jones Industrial ETF. We're looking for a test of the liquidation break low here, somewhere around 370, and it came close before it reversed back and put in a new all-time high by tagging the upper range of the, last week's expected move. And for this coming week, the market is pricing in a potential move up to this 384 area. The upper range is between 383.80 and 382.60. The lower range is between 374.60 and 373.30. So watch for a breakout toward the upper range. And if it's unable to break above the 380 level, look for a reversal, move back down to the lower range, and a retest of the liquidation break here somewhere around 370. Now the SPY tagged the upper range and made a new all-time high after that tagged the lower range last week. Now the market is pricing in a 100% major move of this symmetry move here up at 488 level. And the upper range for this coming week is between 489.30 and 487.70. And the lower range is between 477.20 and 475.70. So this round number here, this 490, could act as a magnet to draw the price up, but also beware of a move back into this small balance area. If we see any kind of a pullback, then keep an eye on this liquidation break low here somewhere near the 468 level. And for the Q, it moved beyond what the market was pricing in last week and went above this 127 extension. Now, the upper range for this week is between 430.80 and 428.10, and the lower range is 414.30 and 413. The potential upside target is the 2x of this balance area here, and that places somewhere around 434.56. So watch for a potential pullback if we see a pullback on the Q back to back test this 1x of this major move here, somewhere around 407. The IWM was able to stay above this 189 level last week, and not much have changed for the coming week. The market is still pricing in pretty much similar level as last week. The upper range is somewhere around 198.30 and 196.60, and the lower range is 188.30 and 187.70. So we'll be watching for a continuation of a move down toward this 180 level. Now, if you'd like to see my analysis on Netflix and Tesla for their post-earning move, go subscribe to my newsletter at smtraderca.substack.com. So in summary, the recent positive momentum and the option market are indicating the S&P 500 could move higher. But the internal, especially the advanced decline line, is waving a warning flag for us to beware of a potential liquidation break because of the negative divergence. And the tech sector was the only sector that outperformed the S&P 500 last week. All other 10 sectors in the S&P 500 were underperformed. So that tells us the new high that was made last week is under a very narrow market. And this is a huge warning sign. Now be sure to smash the thumbs up and subscribe to the channel. Thank you for watching and good luck.